Hey guys, how's it going? It's Andy. In today's videos, I want to talk about a stock that I think has got the potential to do really well in both the long term as well as the short term. If you like this video, please can you kindly give me a thumbs up and subscribe to my channel. Before I get started on a stock that I think is going to do really well, I just want to pick up upon a point that I highlighted in the last video. My friend suggested he wanted to know more about this in greater detail. This is the point about the S&P 500 and how investing an amount every single month into the S&P 500 will actually help grow your money a lot more than just doing nothing with it, or say investing in a cash account in a bank where the interest rates are really low. If you guys haven't seen the last video, please click on the link and that will lead you directly there. That video is basically explaining about my portfolio, some of the positions I'm currently invested in, and some of the reasoning when I hope to exit those positions, what I think is going to happen to those positions. So please check it out. So before I get on to my stock prediction for this video, I'm going to speak about the S&P 500 and how investing a little amount into the S&P 500 every single month is a lot better than, say, doing nothing. Or if you're very clueless about investing, you're not sure what you're doing, this is a very good strategy for all of those novice investors. For those of you who don't know, the S&P 500 is the largest 500 companies in the US. So in this table over here, what I'm going to describe is two different columns. One column is assuming you earn nothing, 0%, on the amount that you invest, and the other column is assuming that you invest 10% on the amount that you invest. So in today's interest rate environments, you're not really going to get much money for your savings in a bank account. So let us assume you have $100 to put aside. I would assume most people, especially if you're working, to have $100. If you don't, then I highly recommend you get a job and earn $100. So now, if you put $100 every single month for 20 years, that's 240 months. At the end of those 20 years, you're only going to have 24,000. Now, if you invest $100 into the S&P 500 every single month, say January 100, February 100, and do that without fail for 20 years, that's going to leave you a balance of 73,630. Now you can see that's a huge difference from not actually earning any interest at 0% versus earning 10% of interest. When you have $500 set aside every single month, at 0% rate you'll be earning 120k, whereas at a 10% rate now it's gone up to 368k. Massive difference again. Now let's see, you've got a high paying job and you have the flexibility to put aside $1,000 every single month. Now, at a rate of 10%, which is simply just investing in a tracker fund at S&P 500, now that amount is worth 736,000, which is absolutely huge. Bear in mind, this strategy is so hands-free. All you got to do is send up a standing order. Loads of brokerage accounts do that. Hargreaves Lansdown, an account which I use, that will do it. Once you set up the standing order, it'll just take that amount directly from your bank straight into the index fund. Really easy. It's good for those investors who are very lazy, don't want to research individual stock market. So I won't say this is completely risk-free, as the S&P 500 does go down from time to time. But however, since 1920, its average return of 9%, which is significant. So especially if you're investing in the long term, I would say that putting money into the S&P 500 every single month is great. Now let's assume if you increase that time horizon to 360 months, that's 30 years, that $100 you're putting in every month would be worth 178k in the S&P 500 versus 36k in a normal cash bank account. The $500 you're putting aside every single month would be worth nearly $1 million now, 900k in the S&P 500 versus the 180k in the bank account. The $1,000 that you're putting in the S&P 500, that's going to be worth, look at that, 1.7 million for 30 years. That's literally doing nothing. You're going to have a portfolio size of that much. Versus if you're not putting in the S&P, just 360k. Look at that difference. It's huge. It's nearly 1.5 million difference. So in a nutshell, guys, I highly recommend. I think everyone should do this, especially if you're young. For those young people who are watching, start investing at 24, 25. By the time you're 55, you're going to be having nearly a £2 million worth portfolio. All you got to do is send up that standing order right now of $1,000 if you can. If not 500, that's still going to leave your portfolio something like $1 million. As you grow older, you'll be earning more money, and I think that's the really viable strategy. Now, guys, my stock prediction for the day is Telehealth Health. So Telehealth Health is a company I believe strongly in. I think it's got huge potential to do extremely well in both the short term and the long term. In the next year, I believe it can go up by 30-40%. If one holds this for the long term in the next 5 to 10 years, I see this stock, times fiving, times tenning in that time period. It's got a lot of potential. It's in a great industry. Even today, it's gone up by 4.28%. Over the last year, Teladoc Health has increased significantly. You can see over there it started off a price around 95, and now the price has reached 230. That's more than 100% gain. And obviously, it's been a little bit up and down recently. As I said before, I invested around this point over here, like around early November-ish, and it's gone up 25%. I do believe this stock has a lot of potential. Next year, I think potentially could rise 30-40%, given the current state of things. So what is Teladoc Health? It says it over here. So it's a multinational telemedicine and virtual healthcare company based in the US. Primary services include telehealth, medical opinions, AI analytics, and licensable platforms. But essentially, if a patient wants to visit a doctor, instead of having to go to the doctor in person, they can just connect with them virtually and discuss whatever issues that they have instead of going into the clinic itself. So that saves maybe transportation costs, maybe saves some time. So there are quite a lot of reasons I think Teladoc Health is going to do really well in the future, and the share price is going to continue to grow. You can already see that Teladoc expects 2020 revenue to reach 1.1 billion. This is double its 2019 revenue of 553 million, and that's mainly driven by the surge in demand for virtual healthcare solutions. Telehealth Giant reported 10.6 virtual visits last year, up from 4.1 million, and its paid membership is expected to reach 50 million to 51 million users, up from about 36% in 2019. Another key event which happened with Teladoc was its 18.5 billion acquisition of Livongo in October, and combined with InTouch as two major acquisitions, that's really going to help cement Teladoc's place in the market and really help the company grow going forward. So if Livongo is a digital chronic condition management company that essentially helps people manage their health through a combination of connected devices, artificial enabled nudges, and human coaches. So Teladoc's acquisition of Livongo is really going to help the company grow, and in fact, it's projecting 30-40% average annual growth through 2023, which is absolutely amazing. There's many key reasons to invest in Teladoc. All its M&A, mergers and acquisition activity, the fact that revenue is increasing so much, the pandemic's really accelerated the way the company will grow and continue to grow in the future. And I think 2021 is going to be a great year. The pandemic's not fully over yet. People can't return to visit the doctors. There's an interesting statistic that 88% of people want to use virtual healthcare solutions, but only around 11% have tried. So there's definitely a lot of scope in the market for it to keep on growing and for people to keep on using Teladoc services. I wanted to show you guys a couple of different graphs. The first graph is showing the telehealth market size. The size of the market in 2019 was 45 billion, and as you can see, by 2026, this size is expected to grow to 175 billion. So a lot of potential growth in the coming years. The second graph is showing the revenue of Teladoc Health. Again, clear upward trajectory. In 2014, it was extremely low. I'd say that's 20-30 million, and now it's all the way up to 500 million. So big increase, and I can see an even bigger increase going forward. So I personally have invested in Teladoc. For me, this is a hold for the long term over the next 5 to 10 years, as honestly I think this could be a 5 to 10 bagger, and as long as I just keep on holding it, I could see significant returns. If you like this content, please give me a like. Please give me a thumbs up, and if you have any comment suggestions, put it down below in the comment box. This will really help me grow my channel and keep on helping me put on content like this.